It's my feel-good breakfast show.
We're live on SABC3. It is your feel-good breakfast show. Kgwedi fedile, re batla tjhelete. The month is over and we want the money. Well, right now, we're trying to help you save that money for future generations of your family, saving for your grandchildren. That's what we've been talking about with Kate Brown, Certified Financial Planner and Director at Fiscal Private Client Services. And we've spoken a lot about the different instruments or the vehicles that one can use. We spoke about Fundisa, and you encouraged people at home to actually Google that, find out what Fundisa is all about and whether you can apply for the benefits that they provide. But what other investment vehicles are there that we can talk about that apply to the general public?
Well, unit trusts are a very useful and flexible way of saving. Mm-hmm. They range from money market funds for money that you're going to need in a relatively short period of time, to investments that have growth assets such as shares, and which may invest both locally and outside South Africa. And those will be more long-term investments, which you can build up over a period of 10, 20, 30 years. Mm-hmm.
Let's talk quickly about what measures you can put in place to ensure that the money that you've invested, let's say if you are a grandparent investing for your grandchildren, that the money will go to them firstly and be utilized for the purposes for which you intended it.
Right. There are 3 investments on which you can nominate a beneficiary. They are some of the tax-free savings accounts, there are RSA retail bonds, and endowments. So you could save by way of those investment vehicles, and you would nominate your beneficiary, and if you die during the period that you hold that investment, the beneficiary would receive those funds. Mm-hmm. If you want to be very, very clear that the money is used for someone's education, then you would deal with it in terms of your will. Now, if you have a beneficiary nomination, for example, on an endowment, then your will has no say over what happens, because that beneficiary nomination is binding. It's a contract between you and the company with which you have the investment.
Okay.
So if you want to be clear that this money you've saved is for your grandchild's education or your grandchildren's education, then you would stipulate that in the will.
Absolutely. And so also very important to ensure that your will is updated regularly.
Absolutely. And is part of your overall financial plan.
Absolutely.
Because it's rather like a jigsaw. Mm-hmm. First of all, you put the corners in place, then you get the straight lines, mm-hmm. and then you start to fill the picture. Yeah. And to get a clear picture, you have to do the full planning exercise.
Absolutely. So any last words of advice from you, Kate?
Yes, save, save, save. If you haven't started already, today is the day.
Wow.
And you're very unlikely to regret it. Okay. I'll tell you a funny little story.
Yes, please. About
me, if I may. I was taught to save at an early age by my father. And when I was about 3, I was growing up in the UK, he took me down, he gave me pocket money, which was tuppence, which is a derisory sum of money. And he took me down to the post office and we opened an account, and into it I solemnly deposited 1 penny. And when I emigrated to South Africa over 20 years later, I had money that I was able to use to start my life here. Because every time I got a little bit of money as a present from my ancient great aunts or a granny, I put half of it into that account. Yeah. And I saved a lot of money. Just by foregoing a little bit now, you will find that you always have money when you need it.
Yeah, live like a prince today so you can live like a king tomorrow. Thank you so much, Kate.
Thank
That's
you.
Wonderful words of advice, and I hope that has certainly enlightened you and helped you do some better planning with regards to your financial future. Right now, it's time for the news.